Good morning, everyone, and welcome to the Trade Talk podcast. This is Shrikant Chouhan of Kotak Securities, PCG Research. Listeners, you will be listening to the Hindi version of the same podcast, which is available on our YouTube, Twitter, Instagram, and Telegram channels. If you find it useful, please retweet and share it with your friends and relatives. Okay, so yesterday we saw one more dip in the market and it was again extensive. We saw broad-based sell-off in the market. Number of mid-cap, small-cap as well as large-cap companies failed to sustain at any important support level and went to the levels of 17,000 during the day. Around 17,150, 170 we were expecting some support in the market, but the way there was weakness for the Indian rupee, which was around 81.50, 81.60 during the day, we saw consistent weakness during the day, and finally the market ended at 17,000 2025 levels, which was down more than 300 points. Also, if we go through with the other indices, then there also we saw huge amount of losses. Bank Nifty also closed to the lowest point of the day, and there also we saw weakness in almost all the banks. Finally, for the day, if we see the macro factors, then yesterday again we saw some weakness in US markets, but for other major factors like dollar index or 10-year bond yield or even crude, they were almost at an unchanged levels. The dollar index went to the levels of 114.2025, but currently it is trading at 113.19. But the way it is sustaining above the mark of 110, it is certainly going to keep more pressure on the Indian rupee. So how our Indian rupee opens at when the currency market starts in the morning at 9. Based on that also the market will take the more cues, but we are of the view that yesterday also FIs sold heavily on the cash segment. They sold more than 5,000 crores, and it was like but natural because there was like a consistent depreciation for Indian rupee. Domestic institution bought more than 3,500 crores, and technically if we go through with our markets, then 17,000, 16,980 is acting as major support for the market. It's a 200-day simple moving average for the Nifty. From there we saw some recovery, but towards the end the market closed at the same level. Maybe it was because of the fear of overnight queues, but today Singapore Nifty is quoting nearly 60-65 points higher. We are of the view that the markets are completely oversold in the short term, and ahead of the expiry we are expecting market to sustain around these levels, around 17,000 or 16,800 levels. From here we are expecting some rebound in the market. 17,170, which was previous lowest level for the market, is now acting as major resistance for the market. So on the dismissal of that, we can expect furthermore rally towards 17,200 or maybe in the best case 17,300. But on immediate basis 17,170, 200 is going to act as major resistance for the market. For the Bank Nifty, there also we are expecting some rebound, and in that particular case the chances of hitting 39,000, 39,200 would be very high. But otherwise, if we see any weakness because of any reason, or if the FIs continues to sell aggressively, then the chances of hitting 38,000 or maybe 37,950 would turn bright. For the Nifty, below 16,980, 970, which was yesterday's lowest level, we can expect next level somewhere close to 16,840, 850, where the market is having again one more leg of support. But below that, then the chances of hitting 16,600, 650 would turn bright. So 16,850 is also going to act as major support below the levels of 16,980. For the day, we are going to focus on capital goods, and infra companies. Also, we need to focus on those stocks which are highly oversold in the short term. Few financials may participate if we see any turnaround in the market. IT companies did well in yesterday's trading session, and again the view is same. With a very short term view, it is better to avoid, but if there is a medium to long term view, then certainly we should be buyer in IT companies. That's all from my side, and with this I'm ending today's morning podcast. Thank you very much for listening us. Have a great day to all of you.